Down here?
Yeah, go to 12 or 13 and then look above there, and you will see that we would have a trend line coming down to about that point. Okay. And then the trend has broken at that point in time, the way I was taught. And this is what I have to understand because it's been screwing me up. And I understand that that's not the way you believe we should be trading. And then you get this break above there. And then what we would be doing in the Fibonacci, at least, is drawing another fan line that would start up at the top underneath where it says hourly and coming down and clipping the top of that area that jumped up there above 12 and 13. So there'd be a second fan line. So then when it broke and came down again, it's coming down above 18 or 19 to the original line that we started drawing if we extended that down.
So you're saying to draw from here to here?
No, drop it down further, down to the thing above 6 or 7 we would have said was just like a heartbeat, one of those things where it's up a day and then right back down. So it was just a break of the trend line, but the trend line would have dropped down underneath like 54.50 there above like 11 or 12 or 13. You see where that, yeah, your cursor was just almost there.
Well, I'm moving it now.
There, so, right, no, down. Okay. There, yeah, right next to that, yes. We would have drawn from the top down and drawn a trend line down to that point. And that little,
from this high to this high?
No, from the one that's right under the Y on the hourly.
Here?
Yes. The second one, that red candle, we would have done the red candle and come down to that one above 12 or 13 where we were earlier. That would be our trend line.
So you're saying you would start here.
Yes.
Ignore that high.
That one was just a break of the trend line. So we would come down. Yeah, this is our major trend right there. Or intermediate trend, at least. Not a major, but intermediate.
Now, doesn't that seem to be so confusing? How can you say you're going to, I mean, there's some rule that says that this blip up was meaningless. Based on what? It becomes a pivot. I mean,
we learned that the market breathes, and occasionally that trend line is broken, but it came right back down in, what are we on here? We're on hourly. So it came back down in a day or within the same day?
It's an hour. It's an hourly chart. So yes, looks like the same day.
Mm-hmm. Okay, so it's just like a heartbeat. It popped up above the line, but came right back down underneath it again. And so then we come to 13 on the chart there at the bottom. And then we would draw a trend line that came down from the top where we started the other one, and we would clip the top of that clump, and that would be a fan line, and that would be another line that we would be using. But I guess what's more important, Greg, is I need to understand why you say down there above 28, 29, why that is not a break of the downtrend. That I don't understand.
Here?
Yes, it's not a break of the major downtrend when you're talking about a much larger time frame, but on the daily chart is definitely a break of the trend in the way I was taught.
Okay, so it's interesting. Let's go to the daily chart. And you're saying the break of the uptrend or downtrend at that point?
It's a break of the downtrend. And if this is an hourly chart, I don't know what each candle is. If each candle is an hour,
yes,
it broke it for a couple of days or several days.
Well, this is today.
Okay, so why is that not a break of the downtrend?
Today is because it's overcome the swing high. It no longer meets the definition of a downtrend. So
Right.
if
On
we
the daily. I mean, today on the hourly chart, it is, you agree it's a break of the downtrend.
today,
Yes.
not
Okay. Thank you.
not when it broke the trend line yesterday,
Right.
right?
Okay. Right. I agree with that. The break of the trend would have been somewhere near that gap, maybe a little beyond it. The doji, and then a little bit of a gap. Is that where you would say it broke the trend?
It exactly broke the trend when it traded above this high, which it hasn't even done it on a closing basis, but these candles are just inching above that high. So we if you understand retracements versus using lines connecting dots, if you see a prior swing high and prices retrace above the prior swing high, it's violated the trend in the time frame that you're looking at.
Okay, so here's where I get really confused, and this is why I know you can help me, but I've just got to figure it out. Why do you choose that candle there, that not hammer candle, but the small body candle followed by the large wide range bar there, the red one? Why do you choose that as the area to break? If you're going to talk about an area to break, why is it there? Why is it not lower, or why is it not higher?
Good question. Because to have an area that we call a swing high, we have a definition for what a swing high is. You have to define what it is, otherwise it's subjective.
A higher high and a higher low.
Right. So you have to define what a high is and what a low is. Now you said over here, it's like a blip, a heartbeat. How do I distinguish one blip from another blip without some rules?
Right.
Otherwise, you just got somebody making up stuff on the fly and just saying, oh, ignore that. Why? Why do I ignore it? And whatever definition they have, another time you'll see them not ignore it. And so which end becomes the question as what you're asking, which highs do I use? What defines a high? What defines a low? I have to give these things definitions that make sense, not to just say, oh, I could ignore this one and not that one, because that leads to confusion. And what
not only that, Greg, but the big thing I think I'm having a problem with is what to relate it to. In other words, I can tell if it's a higher high or higher low, but against what standard? Which area do I use to compare it to decide if it is a higher high or a higher low?
It's
so
black.
That's the thing.
It's black and white. So
okay,
the definition, right, of a high, as I define it, it has to have a minimum to be a high, a minimum of 2 lower highs to the left and the right. And when I look at this, where I can tell the software, show me a swing, a pivot. While I can use 2, I decide to use 3 because I want what I would call a stronger pivot. So if we look at this and we start looking at these highs and say, is there 2 lower highs to the left and right, or 3? Well, 2 will normally work, but using 3 will eliminate some of the less significant ones. So
there are 3 there. Do you agree there are 3 there where you just had been before?
It's black and white. We both can count to 3.
Okay.
Right? Lower highs, lower highs. You got 3 to the left and the right. So that is a swing high. Now, where's the next one? Well, right here. Right? They're relatively close, where this is more fluid, if you will, with lower high bars to the left and right. And this one is relatively flat. But if we just make a simple definition of 3 lower highs to the left and the right, this meets the definition. Would you agree?
Oh, yeah, I do, but I've never had that definition. Thank you. See, I'm glad I'm asking you this. I've never heard that.
This is the difference between MasterTrader and everybody else.
Well, I've been through everybody else.
Absolutely. I, 25, 30 years ago, tearing my hair out, had a lot more back then.
I hope you're recording this, not because of me, but because there are so many traders who need that information you just gave me.
I'm recording it on YouTube, which will save it and you can go back and look at it.
Thank you. I will review it myself. Thanks.
Right. So look, this is, you know what, and I'm so wishing that I could communicate this on a web page, and I certainly can in a webinar. And when I do that, and I really need to do this in a webinar, because it just opens people's eyes up from the BS that's out there. And it's like, we can break this down into a systematic way. And it's one of the few things in technical analysis that we could break down as to being black and white, and that's being trend analysis. So as we define in a piece by piece systematic way, what is a high and what is a low? And then are those highs and lows overlapping each other, going sideways, which is just a mess of uncertainty? Or is it a clear trend of lower highs and lower lows? And if it is, then we define major resistance as the high prior to the lower low. And if prices trade above it, it has violated the downtrend because it no longer meets the definition of a downtrend, black and white. It will break a trend line every time without fail, guaranteed, which makes trend lines unnecessary. They're all subjective. And when you start getting into where do I connect the dots, which is a question every one of us have ever asked when we got started doing this. Do I connect it to highs? Which highs? Do I connect it to closing prices, or do I connect it to the tails? So all of these things just become a vicious cycle of questions that have no clear answers to them. So when we break it down like this, it's just black and white. We all have to come to the same conclusion every single time because the analysis is undisputable and universal. So I can apply this to the euro, to corn, to Apple computer, whatever. It doesn't matter because it's based on the truth. Now, the real power comes in as to why did it break the trend line? Was it just some intraday blip that happened in the market? Was it a climactic move lower? Or is there something to the left of significance, meaning price support, not a Fibonacci line? Right? That's subjective. If there is a line there, let's just say that you were in a group and they are FX traders. They love Fibonacci. And if it's more complicated, it's right up their alley. And they say, oh, it's at the 0.682 retracement. And we're looking for the turn here, blah, blah, blah. And there's some price level to the left there. At that point, it makes sense that there would be buyers beginning to set up. And then from there, do you want to take a position here based on that support? And you could, and gap down, reversal, bottoming tail, and saying, I believe that this is where the turn is. And at that point, you're anticipating the turn. This is where the money management comes in that is so critical because there's no guarantee that this is going to hold. Today it did. But if I share size this for some point, maybe slightly lower, right, where, the other day I was talking about momentum divergences where something comes down and makes a new low, but on slowing momentum in turn. So I can calculate my share sizing based on a break of this low because it's a downtrend. But if it moves up, and violates the trend, now I can start making adjustments as to how I want to trade that. What is the reaction here? So far, it's a bullish one because it's going sideways versus pulling back, and it's holding the gap. So again, multiple time frame analysis, combining that daily. I don't have the moving average on here, but okay, because I've got the daily over here. Right? We're using that as the 5. So what we talked about was yesterday or today, I forget, whatever, was that looking for Intel to come down toward the 200-day moving average, which is in alignment with that bottoming tail over there. Makes sense. But the markets turned around yesterday. They're up today. They're holding on for now. But this is the type of pattern that I explained. This isn't going back up to the high without any kind of stall or retracement or retest, same as we talked about with the market. So while this looks great and it's likely to move up some more, right, this has violated the trend. And so as we do the same, and let's just, and this is where it really becomes a mess. It's like, well, here's a pivot. Do I connect it here? And now you're saying, well, that's kind of short, right? And you got all that stuff to the left. Well, do I connect it here? Well, now if I direct it down here, maybe if I ignore that tail and now I keep going, well, that seems to make sense because I've drawn it from left, right, from the right down to the left. And now I can now show you, if I wanted to convince you to use trend lines, I would say, you see the line and it broke, see what happened? And if I then went and projected it, and what I would be wanting to tell you is that once the trend line broke, it became resistance. No, it didn't get up there. But if it did and touched it, boy, I could convince you that this trend line is so powerful. And when it does touch, it's because it's something to the left there, price.
Well, Greg, your point is well taken, and I never really stopped to think about it that way before. I mean, I've taken Fibonacci classes, and I've got to say I'm reasonably good at them, and they do work. And what I like about Fibonacci, and again, I'm getting back to the point that you really don't need it. Now I'm understanding what you're saying, is that you can project forward not only in price, but also in time based on previous movements on the chart. And I used to say when I was in Fibonacci class with the one guy who was excellent instructing it, is that what you're really doing, because I'm a musician, is you're finding the melody in the chart. But what you're saying makes perfect sense, that it's already in the chart. All you have to do is look left. And why do I say that? And I say that because the percentages on Fibonacci are based on previous movements of the stock. And if they worked, because it's a repeating I'm saying percentage, that's the wrong term, but a repeating ratio that's kind of like these golden ratios and all that other kind of thing. If that's the case, then that chart, if it's a good chart, has worked with those ratios before. And so that ratio, that pattern, that melody is already in the chart. You don't need Fibonacci to find it. All you have to do is look left. So I do understand where you're coming from now when you're saying you don't need Fibonacci. I've been trained there. I've seen the power of it. It does work amazingly well, but I like simplicity. I am to the point in my life where everybody complicates things. I like to break them down as simple as possible. And I love the way you do this. So thank you.
And you know what, Pat, because I've studied what you've studied many, many years ago, there's no harmony, there's no repeating ratios. This is all marketing BS, quite frankly. All right. This doesn't truly exist. And when we start talking Fibonacci's, right? So the tool is right here. And now where do I draw it from? And this is where it gets into, I've been through this and looked at it, try to make sense. We start saying, okay, if I draw from here to here, well, here's the retracement of the whole thing. Well, you can see right there, It's right in alignment with the congestion there. And then you get into, well, do I draw it here? I know all the story. And now you have this overlapping fibs, and you start talking symmetry, and these overlapping lines now provide a stronger reference point to focus on. And then there's another low, and we do that. And you see, okay, we've got overlapping lines here, but oh my goodness, if we were to find one where there were 3 or 4 lines overlapping each other and all of that, there is a more significant resistance area. You can't create
Confluence, yes.
resistance by drawing lines and connecting dots. It's right there on the chart to look at. Just look to the left and see what's there. Right?
Now, if we can go back to the chart we started with, and talk me through that, what you see when you see what I consider to be a break of the downtrend, the one that showed it differently. How do you, as an experienced trader, what goes on inside your mind when you see that?
Well, for me, it's black and white. The trend is
broken.
The trend's broken. So part of the thought process is, if the trend is broken, by definition, violating the swing high prior to the lower low, the next step in the thought process is, where's the next reference point of support? Because if you do not have the void concept, odds are it's going to hit the next reference point of support, and it's going to attempt to bounce. The closer those reference points are, the greater the potential of getting caught up in a choppy situation. So when we look at these reference points, and you see the patterns that we pick, they're not like this to sell a call spread, right? We're looking for this, where it starts to go up and we have a break. Or if it's come down to this area, it's attempted to go up and go sideways. In other words, the correction through time is moving prices away from the next reference point. Now, we all know, we've talked about this market being news driven. So that news, and we know Intel had some news about the CEO, more news on top of news, created this violent move, but other semiconductors also got pounded. So break of the trend is simple. Where's the next reference point? It violated that. Now, my rules, so when I update, which I now do it in the ETF letter, I used to do it in the advisory letter, and I'd show a trend matrix in multiple time frames. One of my rules is, if it breaks below 2 swing lows at the same, in a move, a violent move, I move it to a downtrend, which is common sense, even though it hasn't formed lower highs and lower lows yet. Right? So that's kind of just a common sense part that I've added to that. So at this point, you've got Intel coming down into an area of support. We know the 200 is a bit lower. It's gotten climactic. The market has had an effect here. And how far can this go up? Well, if the market keeps going up, probably this keeps bouncing, and it's shown relative strength today. Now, if we clean this up,
you agree the likelihood of it going beyond that 1, 2, 3, beyond the wick of that third red bar there, the upper wick of that third red bar, is pretty unlikely today. Not that one, or excuse me, I said wrong, the second red bar there.
Well, I don't know. I don't think it's unlikely. I think if the market turned around and ripped higher, I think that it's possible, but I would agree it seems less likely that it would do that, because it would come into this area. But I mean, based on the price action here, that isn't a very long base to launch a move from. But if the market started to rip, and that's why we look at the market, I don't think it's that out of possibilities that it could come up to that area.
Now, this is the chart with which we started, and this is the one I wanted to go back to, because you're telling me you don't see this as a break of the trend.
No,
And
I do.
so,
I said it's obviously a break of the trend because it moved above the swing high prior to the lower low.
oh, okay, I thought we were starting out criticizing people who would go long there.
What I said was, I said two things. I said this is not a break of the trend, because it violated the line, right? And what I also said was, once it got down here, even before it violated the line, if it was in an area of support, I could then start considering to buy this if I had the right money management, which would calculate a max loss below that low to give it extra room.
Okay.
Now, what this does here, I mean, because it's just beginning its turn, this could come down and do a retest. Bottoming patterns are erratic. And until it really begins to turn around, you typically don't have upside momentum. Upside momentum comes in strong stocks that are already in uptrends and they got voids above. Stocks in downtrends that have experienced moves like this are very uncertain. And you've got a lot of people here, that are saying, please go up there so I can get my money back. So they're going to be sellers into this.
Oh, yeah.
Right.
Oh, yeah.
So we look at it like, well, where are the sellers going to be? And does this trend continue? And so while this doesn't have higher highs and higher lows yet, so I can't even call this an uptrend, but I know it's not a downtrend anymore. So it's a sideways trend. And based on the market, the turn in this, the relative strength, I'm betting in what I call intelligent hope mode that this can go up a bit further. I don't know that it'll do it today. It seems like, hey, we're, in front of the weekend and holidays, and, the market's kind of just backing off here a little bit. So I think it's unlikely that it'll go much higher at this point. If we were in like a market that never ends, we just continue to monitor this. And, so we can now start comparing this to the broader markets and we say, well,
before you leave that, I want to know one thing, because I think you're in this. Where do you think this is likely to go? So, like, you don't use Fibonacci lines and you don't use span lines. So how do you project where you expect it might go?
Two things. Where's the next area of resistance, which is clearly right here. Right there. And
actually, that gap right underneath your cursor, it's closed by the tails, but there's a bit of a body gap there. You wouldn't count that as resistance at all?
Well, it's an area. When you start looking at things like exact points, which is what Fibonacci does,
right?
It's stressful. Things aren't that exact in trading. And when you try to make them pinpoint laser exactness, it kind of leads to the Holy Grail scenario, and that doesn't work. Just looking at this, like, I don't know whether it's going to stop here or here or here, but we can now start following the trend. And let's say this did start to accelerate higher. As a day trade, I would then go to the 5-minute chart, which this could violate the uptrend on the 5-minute chart. And I could still be okay on the hourly. This has gotten whippy over here already, as you can see, it's going sideways. So part of what I have to decide here, especially in front of, the weekend, is, do I think, and this is a hard one. Do I think Intel can hold up okay without, falling apart here to go up on Monday? That's kind of just like a guess. Who the hell knows?
I agree. I agree.
Right. I mean, this isn't like we're dealing with some strong stock that is in an uptrend and the odds are, really in our favor that it can go up. I mean, this thing could gap down on Monday and it could come down here, it could gap down, and this could be all part of the bottoming process that it's building to go higher. And so, you know, it's not a no-brainer, that's for sure, but so far, so good.
It could actually drop down to whatever that would be, maybe 48.50 or something, and put in a W bottom.
Well, if it did, and what Lead is asking me right now, would I consider that it has formed a double bottom on the hourly? No, it has not formed a double bottom on the hourly, because to do that, it has to come back down. That's the definition of a double bottom, is it's a retest pattern. So it has to come back down to do that. And you know, when we talked about the broader markets, right, we talked about the market retesting the low. That was the whole thing, right? Let's look at the S&Ps, right? When on this day, when it was coming down, right, what I was saying was, can it form a double bottom here? Or is this weakness going to result in a measured move to the downside? Right? Which was, you know, after this day. And I said, it's at the lows. And I showed you the hourly chart and I said, can this form a double bottom? What did the market do that morning? It went down, and it was like, just try and like drag us into the short side, which it could have went lower, but as an intraday trade, which I'm going to combine that intraday time frame, you don't short after this many bars down.
Oh, no, you're right. Right.
So I wait, and now my choice is to use the hourly chart and 5-minute chart. And by the time I get a bottoming tail bar, it's like, I don't think it's going to go down. I'm not positive, but as it's held up here, it became more and more convincing that it was going to hold. Lead is asking me, the 2 red candles don't constitute enough of a drop. I don't know if I guess we would go back to Intel, Lita, because that's what you were originally asking me for. On the hourly, no. This is a W bottom. You have, right? We have a definition, right? It has to make, right? It has to do this. It has to have some kind of a decent retracement up and then a retest. And this is where we start combining candlesticks to confirm that buyers are taking control on that retest. So this will have formed a pivot, right? We've defined pivots. This defined a pivot. This has now created support. There may be nothing to the left over here. I've got rules for that. Right? You have to have rules. Otherwise, you're kind of like flying by the seat of your pants again. So just because I believe at this point it can go lower, I have rules that say if this forms a pivot, I still think it's going lower. And I'm going to look to short the lower high. But this reference point, you've heard me say that if this high is relatively close to that low, I don't want to short that, especially if this has become climactic. So, but let's just go with this. And once it retests, right, with a pattern like that, you've got a W bottom, which then suggests taking out the high. So what Intel would have to do to form a W bottom is come back down here, just like the S&Ps did. I'd much rather, since I'm long, it goes sideways here and create an area of support, and it won't become support unless it can trade above it. It will be resistance if it trades below. I'm in wait and see mode at this point. It's just going back and forth, nothing's going on. If I flip down to a 1-minute chart, I'm like in Crazyville. If I'm going to trade it, I'm getting sliced and diced and creating commissions. So we got to back away, right, from that. I don't go down to like a 1 or 2 minute chart unless there's momentum. Right? This doesn't have momentum yet. Let's clean this up.
So at what price did you enter? And if you leave it on for the weekend, at what price will you place your stop?
I entered at 49.66.
Okay, thank you.
Right. So it's kind of like I've got a small profit, not much. Right. And
is your stop going to be underneath that?
Right now, I'll have to stop it out under 75 and I'll get out with a little bitty profit and save my commissions and whatever. And, kind of like waiting here. It's already 3:30 and, do I want to hold it over the weekend or not? It's not an uptrend. I'm not like super confident about the market or this. So if I see the market break, I think I'll just kill it and move on.
Yeah, I'm not the pro, but I wouldn't let that, for me personally, I would not let that trade on over the weekend.
Yeah. And, this is a personal choice, and, it could gap up. And because of the daily trend, it's like, okay, if it gaps up, if I'm going to focus on this, I can find another entry point. So it's just a new trade. And, it's certainly not, some great looking swing trading opportunity here. It just gapped up this morning and, it just looked great. This bottoming pattern right here, it gapped up, it held. And, that's where, I entered it right there.
Now I'm going to tell you what I would be doing over the weekend on this if you think it's likely to continue forward, given the fact that we're into a holiday week next week and everything. I would take my profits if I had some decent profits on it. And then if I thought it was going to continue and I was afraid I was going to miss out, of course, here we go to the emotional thing again. I would buy myself an at the money or just one or two strikes out of the money call on it. And let those go so that if it did move forward, I wasn't going to lose all of my profit. And I did manage to save my original investment and a small profit.
Thanks. Somebody was typing in that Intel is HCCI. I'm not sure what that means, Eduardo. But did you say to sell a call against the position?
No. I would close my profits on my original long of the stock. And then I would buy a call if I thought it was going to continue to move. And that way I wouldn't lose the opportunity to make some more money if it did.
Right. And that is certainly one way to do it, and then if it goes up, you're going to, profit from that. And, that's part of trading is making a decision as to that and looking at probabilities. And, it's a 5-minute chart, but, this looks pretty good. And until, if it breaks below there, it's not going to look pretty good anymore. And that would open up the door that, now this correction through time has created resistance and opens up the door to the potential of that W bottom. Edward said inverted, 5-minute inverted head and shoulders. Yes, absolutely. All right.
Maybe I need to let you get back to your trading. I appreciate the time you've taken. Thank you, Greg.
Yeah, honestly, I'm not going to be probably doing anything in the last 25 minutes here other than just monitoring and, seeing if this does anything or making a decision to get out. And, the other position that isn't really doing much of anything either, and it's actually at a small loss. Not much to even think about, but TEXT, which looked good. I think, right? 37. Yeah. I got in this at 1941 as it started to move up here. And now it's just kind of meandering sideways here. But, I mean, this looks great. That's in a strong uptrend, but, there's no momentum today. And whatever's, nothing is really moving up. That looks fantastic here, right? The mid caps coming in, spiders, but overall, I think it's just a lack of commitment which is understandable and what we spoke about this morning as to the way things would probably end up. And we'll see what Monday brings. Right? So that was very good. Another awesome lesson.
Thanks, Greg.
Okay. All righty, Pat.
Can you mute me? I'm not quite sure how to mute myself.
I'll take care of it, sure.
Okay, thank you.
There you go. All righty. Let me fix my chart. Right, we scrunched everything up, but there we go. Oh, the Russell here continues to weaken, and I think I'm just going to close things out here. And just relax into the end of the day and wait for the close. Apple's starting to roll over here a little bit. And spiders coming in. It's like, a lot of times, you might think that this selling right now is something of real significance, and it could be, but as time goes on and we have a pattern as things started out this morning like this, of course the thought is, can this follow through? And as the day continues, you and I and everybody else start to feel, like, hey, it's just not going to happen. It's 339. There were these retests and attempts to go up, and it's not happening. And the buyers are, probably gone for the weekend. And it's like, next week's another week. Move on, see what's going on. There's still a lot of, uncertainty in the market. And, what are the option traders doing? Right? Let's see what the idiots are doing. They're backed off from their extremely bearish bets. This was up here yesterday, and it was 1.44 up in that area. So they've backed off a bit, which leads to the scenario. See where the moving average is now? Of course you do. This leads to potentially, right? We always have scenarios, different things that could happen, which could set up. I said this morning. I'm just remembering my own comments as to what could happen. Let's say that this goes down a little bit and comes in, and now the moving average of sentiment pushes up. It's already starting to move in, but I'd like to see it up here at around 1.2, which is getting close to, and maybe breath comes down into this area where the spiders retest this low. And then what do you think this would look like intraday? Eduardo. Maybe a head and shoulders bottom. If we get a pullback and a move down, right? Well, we've got the double bottom. The new low is a bonus on a W bottom, right? Because that is, a little shakeout that takes out the stops. That's awesome. Right? But what if we do get that selling on Monday down here and we get a bottom and we get this kind of price action, or this kind of price action? I don't know how it's going to happen around here. Now, right, we've got this creation of support and this buildup of time, right, that's created the support and helps to ease all of this uncertainty that we're dealing with. Yeah, you got it, Pat. Yeah. So, I'm going to make master traders out of all of you yet. And I'm going to get you to get the squiggly lines off your charts. No doubt. All you have to do is listen and start applying it. I know, that, see, the indicators are a trap, right? It's like the diet pill. Oh, don't we all wish there was a pill I could lose 10, 15 pounds on the pill? But even if you could, are you really healthy because you lost that without any exercise? No. So even if things worked out with the indicator, you still don't know what you're doing. But this is more difficult to process what I'm telling you and put it together so it starts to become second nature. But once you got it, of course, it is second nature. Well, there's a lot of different ways to exercise. Bicycles are great. Don't run. Do not run. That is terrible on the knees. I used to, for the longest time, I've been, start exercising when I was 12, 13 years old. Hey, Peter. And on and off, as we all do, we go through different cycles. And used to go with a private trainer like 3 times a week. And eventually I got busy with stuff and stopped and didn't, hadn't exercised in quite a while, put on some pounds. And one of the things that you learn about exercise is that when you start doing it again, it could be extremely painful if you try and do too much. And it's hard to start. And the best way to do it is, start small. So what, I started doing recently is, I have this spin bike at home, this Pendleton thing, and it's really cool. But what's really cool about it, you can spin bike, whatever, but it has different recorded programs. So when I think about what I used to do going to spin bike class and for 45 minutes to an hour, which was fantastic when I could do it, there's no way I could do it today. And I think about that and I was like, forget about it. But they have recorded things for 15 minutes. And I was like, I can do 15 minutes. And I started doing that. Yesterday I did 25 minutes and so on. So you begin to build, and when we think about what I'm explaining to you, if you think about trying to get your head wrapped around that at one time, it's too much. And of course, one of the reasons why, well, twofold, we don't do live seminars like I used to. That's the way it used to be done in hotels and then eventually on the internet. But, doing them recording is like, now you can press the button, listen to something if you want for an hour, shut it off, come back to it, turn it back on again, listen tomorrow or the next day, go back and listen to it again. In other words, starting off slow and not trying to overwhelm yourself. Right? Anne, if you're listening, I typed to you in Messenger yesterday. I said to you, you seem to be like stressing over certain information. And I said, you're in control. I says, don't try to consume all of that information. Narrow it down to what is easy for you. And the stress begins to dissolve as to doing that. But, you've got the little thing in your ear telling you about the money that you could make. If you get this, if you do this and that, you can, but you're not there yet. So you have to kind of say, yeah, I'm not, right? I'm saying, oh, I'm not there to get on that spin bike and try and pump out the next hour on that thing. Because, if I do it, I'm going to be in some serious pain. the next day, and I'm not going to do it. Yeah. Yeah. Well, we're two different people. And, as you know, Dan is an options trader. And while I do some options trades, my comfort level is just buying and shorting. And I've done it for, almost 30 years. It's second nature. I just see the pattern, I press the button, and I manage accordingly. Where, option strategies, the money management of it it's different and it's more complicated. And what doing spreads, which has become so much more easier, with the technology of um, clicking and so on. But still, by the time you set up your spread, I'm already in. But it's this whole different animal and goal as to what you want it to do. I hear you. We're doing those sprints and that kind of thing. But Peter, you have to build up to it. Like, so if I got on a treadmill and started sprinting like you're saying, I could probably do it, for that short amount of time. And I get it. My lungs are probably, if I do it a few times, they're going to be burning. But I'd rather kind of build up to it a little slower. Oh, I realize how I'm different, Pat. Getting enough eyeballs to listen to these discussions and to take it seriously, because they've got all these little monkeys on their shoulder giving webinars every week throughout the week saying, hey, buy my latest, greatest indicator, or my method on how to turn $100 into $1,000, and all of this versus, yeah. Well, it is different, but people are inundated with, the indicator mythology, hocus pocus. Even with the old company, which, was grown explosive growth because of the internet at the time. One second here. The marketing part was never the strong point. It was just being at the beginning. The following was great, but that eventually began to wane through the bear markets and such. So, and then, having created a lot of the competition myself through education. I mean, you go to the site and read about us, and that's the short list of who's out there. That was a student that's out there teaching. All right, Peter, you know what? When I get on the spin bike, I'm going to, and they do that. The instructors there are live or recorded. They make you do exactly what you're saying, in momentary sprints as to empty the tank, and like you're saying, and then to, get your breath back and slow down and do it again. Well, Pat, they are desperate to try and bring in some revenue, and that's desperation when they start doing stuff like that, because at that point They're selling the future that they don't feel they have anymore. I'm going to do it, Peter. Yeah. Well, why would anybody do such a thing and, you know, get their customers angry or their followers angry? You know, all the years I've been doing this, I never sold a list. Never, you know, exposed those that provided me their email to some garbage. Never. No reason to, you know. Only if you're desperate, you do things like that, or just greedy, and you know, short-term profits versus long-term building, you know, a good name. This looks like, you know, the market's coming in here pretty good. So I'm glad I sold my Intel. You know, but again, this doesn't mean a whole heck of a lot in the context of what we're looking for here. I would have been happier. I mean, look at the weekly chart. And we're in the process. I said this probably in the video that I sent out Thursday, that whatever, you know, we lose track of stuff, that this turn, if it's going to turn here, you know, you got week one, you usually get week two, and so on. So we'll see if we can get the backing and filling next week. If we get the head and shoulders bottom down here, right now we've just got traders that were hoping, and I can't say they were wrong. You know, I was hoping for a continuation of this morning's strength. XLF looked fantastic this morning. Don't beat yourself up. I mean, when we reviewed pre-market, you know, the financials were up and doing well, and they're coming in like everything else because they didn't go up. Now, Pat, look at the hourly chart here on XLF. Did it violate the trend on the hourly chart? Is it still in a downtrend? Don't need to put any lines on it. Just apply the definition. No, it's not in a downtrend. It's in a sideways trend. Right, here's the swing high prior to the lower low, and prices traded above it. So it's not in a downtrend, in a sideways trend. Bitcoin 58.65, the futures. Yeah, hasn't looked good in a long time, Dan. Looked like maybe last month it could turn. Everybody just closing out positions here that because they didn't go up, and we'll see what happens on Monday. This bottoms are erratic, and they do fall apart sometimes. And this is just the beginning. It's not even any kind of a strong bottom. It just broke the downtrend on the hourly. But this is the beginnings, if it's going to happen, on how you get a red bar ignored. It starts in the lower time frame. It's normal. Everything's the same way. I mean, I don't know about you, but I read a book, something that's, you know, most things are going to be new if you're reading it anyway, but a lot of times I have to read it, you know, well, if a section is interesting, I'll read it a couple of times, you know, and that's normal. It's how you learn.
Why do you think I read books with big pictures in them?
I know what kind of books you look at, Gibby, with pictures.
With beautiful pictures. That's what I'm talking about.
What's up on the day here? Biotechs.
NTAP came in. Yeah, everything came in.
Watch. Well, historically, the market will go up on Monday because of the holiday. We'll see if the historical thing follows through. Or right, Monday afternoon into Tuesday. All right, everybody, we're winding it down here, and oil held on to its gain. Pretty amazing. The USO there. We'll do it all again on Monday.